Hi everyone and welcome back to my more important analysis videos with me, Rich Perry, market analyst at Antec Markets on Wednesday 22nd of March. Looking at Eurodollar. Eurodollar is still in the process possibly of this massive head and shoulders base pattern. I spoke to you about the big potential head and shoulders top on the trade weighted dollar index, and it sort of reflects this head and shoulders base pattern that we've got on Eurodollar. 108.50, old kilo of October, has become a basis of resistance. Now between 108 and 108.50 is that sort of line, sort of neckline resistance, I think, of this top pattern. You've got a series of sort of resistances that come up between 108 and 108.50. 108.72 was that spike high on the ECB on December. And that clearly is something that I think the market is looking out for. But I think that just for now there's a bit of a consolidation as the dollar has just regained a little bit of poise today. Nothing too significant yet, but that bull candle that we saw yesterday was a really big statement of intent, I think, finding support around that 107.10 mark, which was the old breakout level, and sort of decisively higher. Momentum indicators strong. RSI above 60, although 60 has tended to be the limit. 62 a couple of times yesterday, 63. So yeah, I mean it's sort of on the limit, isn't it? If it moved into the high 60s, you'd really sort of put the pressure on the upside, I think. But MACD and stochastics also positively configured, but it'll be very interesting to see if the market just starts to find a bit of support today, only uses a little bit of a corrective move and sort of maintains this run, because it is just an unwinding move, I think, today. What we've seen is this market just pulling back into that support band, 107.10 to 107.80. 107.70 was that little breakout high from yesterday, so that becomes supportive initially, but 107.10 is the key level to look out for near term. 107.05 was that low that we saw on the 16th, but generally 107.10 was the longer term pivot line. But you can see here that the run of higher lows continues. It's basically just unwinding, isn't it, back to moving averages, using the RSI, sort of unwinding back towards 30-40, MACD lines back towards neutral. So it is, I think, it's just an unwinding move at the moment, and certainly if it starts to build support in the belly of this little trading range, you could argue around 107.50 is sort of a bit of a level, bit of a pivot, isn't it? Arguably a very small pivot. So above 107.50 you'd still be above that moving average, which is a 144-hour moving average. I think it would be still intact as a breakout. So still looking out for pressure on this big neckline, I think, despite the little corrective move today. I think above 107.10 you're still positive. So I wish you good luck in your trading, and I'll speak to you later. Thank you.